Now, if you listen to our next guest, you would have made money on Baidu stock as well. We have Michael Liang, who helps to oversee almost $100 million as Chief Investment Officer of Foundation Asset Management, and his China Opportunity Fund has gained more than 50% since inception in 2006. It has also beaten the Bloomberg hedge fund benchmarks over the past year. And it's nice to see you once again, Michael. You're joining us from our Sydney studios today. So let's talk about Baidu.com. You've been a believer for a long time, saying that you liked it as far back as September, and the stock is up more than 30% since then. Do you still like it? I mean, people are looking at $473. Not cheap, we'll say that.
Well, it is not cheap, but given the quality of the stock, I think it's worth, for long-term investors, I think it's worth holding on to. For people looking for short-term entry points, you probably might have a better opportunities, but that's the nature of the stock. You really can't really pick the high and the low.
Okay, you can't pick the high and the low, but what about Baidu's forecast? I mean, that's really why the stock price is surging at this point. It's 53% sales forecast, actually topped estimates. How much do you think that has to do with the problems surrounding Google in China right now, and are they overestimating?
Well, Google has its own problems, but even before this happens, right, Baidu has always been a leader in the Chinese language search in China. I mean, Google is a world leader in English search, but in terms of Chinese search, I think Baidu has more than 62% market share. Maybe Baidu can benefit a bit more from the Google's problem, but Baidu is on its own is a great company.
But annually, it looks like sales growth has actually slowed at Baidu.com, which some point to as a concern because it's 40% last year, down from the 80 and also the 100% that we've seen in previous 2 years. I mean, isn't this a point of concern for buying into Baidu when sales growth is slowing?
We don't tend to look at stocks on that short-term basis. I think if you want to value a company like Baidu, you need to value the company on a PEG basis. And the growth, you need to look at the long-term growth rates rather than the next quarter or so. So I think it's conservatively speaking, you can look at the Baidu growth rates of more than 40%. I mean, if you look at the PEG below 1, there's an interesting entry point. So, anything less than 40 times PE will be interesting.
Okay, and what about Baidu stock? As you say, you can't pick the highs, can't pick the lows, but if you buy in at these levels, how much more does an investor have to gain for this year?
That's a tricky question, Susan. I really don't know.
Right.
I mean, it depends on a number of things, but I think I'm very confident in terms of the business model Baidu has. It has more than 60% market share, and the pricing power is very strong. You might see the short-term up and downs, but overall, that kind of quality of the business probably will not change for the long time to come.
Okay, well, I'll tell you what analysts are saying then, Michael, and you can tell me if it sounds accurate to you. Our target price for the average analyst in our survey is $468 US. It's trading at 435 at this point. As Paul mentioned, Goldman Sachs and the like looking at 473. What do you think of these numbers for Baidu stock?
I think it's achievable, definitely achievable. The time frame is a little difficult to say. I mean, we're a little concerned about the market at this stage. So Baidu was in one of the equities listed. It will be also impacted. So in terms of that, we're very confident on the E, on the earnings, but we're not too sure on the P's. That's a very tricky bit.
Okay, well, what about the caution? Let's talk about the caution right now, because your long-short equity fund is pretty much positioned at 50-50. So it sounds like you're not sure in terms of which direction the market's going to go. It sounds very cautious, and there's a lot of hedging going on here. But what exactly are you seeing that you're so concerned by?
Oh, I think if we talk about China, the liquidity was pushed out the system last year. In our guesstimates, it's probably 20–30% more than what is needed. So those liquidity need to be unwound. The officials, the government need to rein in those liquidity. It would have an impact on the overall asset markets, not just stock market.
So is there a bubble on the mainland then? Because it seems like you and other people are concerned about these asset prices that we're seeing on the mainland at this point with this huge amount of liquidity growth coming in from the banks, really in terms of loans.
Well, if they let the thing keep the way it's going for a little while longer, you might see a bubble. But I wouldn't call it in the bubble territory. I mean, there are some first-tier properties here and there have been bubble prices. But overall, I don't think that's the case. But I think the government is quite proactive. They're showing the policy foresight, and also they're seeing the very strong fiscal discipline. I would think that would help to extend this cycle. I wouldn't call it, bubble gonna burst, that kind of scenarios. I mean, market always tend to go hot and cold.
Okay, Michael, we have about a minute and a bit here before we get to commercial break. But let me just ask you, you have 40% shorts right now. What are you shorting?
Cyclical stocks. I mean, last year, most of the cyclical stocks like cement, steel, aluminium, even some retail stocks has gone through the roof, given the fixed asset investments has gone up. But I think if you look at the year-on-year basis, and this year gonna be a mediocre year for those assets. So I'll be shorting those stocks.